How you doing?
I'm good. I'm good. Good to have you back. Travis had to take a couple of days off, and good to have him back. We're going to go through opening bell. We're going to OODA Loop our charts, find develop a trade plan for the day. Our goal here in the morning is not to predict where we think the market's going to go, but our goal here is to have a plan for when the price goes in that direction. So we'll develop some levels. We'll identify our chop zone of where we should probably stay out. And then we'll also talk about a big announcement today, not at FNL, but the FOMC. So that's going to be a big one. They're talking about a big rate hike. So do you have the risk disclosure? And we all know that trading futures contains risk, and only risk capital should be used. You can lose all your money trading futures, crypto, stocks, options, all that good stuff. So use risk capital only. If you want to take a picture of the disclaimer, it's right there on the screen. Take a screenshot, use your phone, whatever you want. So let's get to it, Travis. We're going to start with our 5-minute chart. Just take a quick look at that, and then go to our daily and go down in time frames and get a little situational awareness and develop a plan for the day. Go for it.
Awesome. So one thing you'll see, maybe a minute or two early into this trade, but we're showing a turnaround off the 200 EMA, which a lot of times, maybe not, how do I reword that? Doesn't always look like the perfect trade, but the way I like the 200 is it's the last line of defense in a long trend, if you will, or the last retracement that I might think about taking. In this case, we do have a double bar off that 200, so you will see that I'm in a trade right now. It's a P4, S3, gain of 4, stop of 3 from this area. I'll either lose 3 or make 4, not trying to do too much with it because we're approaching opening bell. So my hopes is that trade will settle itself out in the next 10 minutes or so. But overall, let's take a glance at what's going on over this morning. Looks like we're kind of creeping up off of kind of an uptrend, you could say. If you wanted to kind of trace the price action, looks a little bit like that until recent. And we had a couple reports this morning that you could make a case that it sent the market down, or it could just be a regular retracement. A lot of people would refer to that as a double leg pullback, if you will, where it tries once to push up, can't quite make it, and then pulls back again to turn around. So it's a common pattern of the market where a lot of people avoid the second pullback. Go ahead, Rob.
So, another reason why I like to trade you're in is if you measure use a Fibonacci tool from 45, the top 45.88 down to the bottom of 41, 70, 76 or so. Yeah, you don't even have to go there. You could probably even, that's fine. Where is your fill at? 38%. So should this decide to, because we don't know for a fact that the price is moving up. This could be a pullback on a move down. We don't know. So your fill is actually within that Fibonacci range of a retracement. So if you're wrong and the price isn't going to go up, continue to go up and make higher highs, you can still fill on your trade on a retracement.
Right. So in different words, even if this is a retracement to go down, the common retracement goes from 382, maybe even to 618. So I'm in a good area. Whereas if I was asking for a fill back at the very top, which is a common tendency, a lot of traders might even extend their gain and say, I got a great entry point. It should go to the higher high. And they want to move their gain out of the way. And what that does is create a lower percentage trade. Now, my advice would be to build a track record there. I'm not saying that it's a worse trade if you can repeat it over time and tell yourself why. But to me, it's a higher percentage trade to have my gain at 4 points than it would be at 8 or 10 or 12 if all of my contracts were together. Personally, if I was trying to get more than that out of this trade, I would definitely still want to scale out for reasons like Rob's saying. Even just halfway back up this move is a great place to start scaling out of this trade. So
we just don't know for a fact that the price wants to go up and make a new higher high.
Right. With this deep retracement, it definitely kind of throws a wrench into that perfect lightning bolt pattern we're looking for because we've got this now.
Correct.
If you do a fib off the top there near R1 and the 330 wick, it turned around right at 618.
Awesome. So let's see that. So if we go from the very bottom and then to the very top and get rid of this other one just to prevent the confusion. There we are, 50 to 618. So perfect place to see it turn on that big move up. So what he's kind of pointing out is that if you consider that one move up and your retracement and turnaround, we are at a perfect 50 to 618% turnaround. So
off the 200,
great place.
Yep, great spot. Great spot.
Off the 30 second opening range at 3 a.m.
Wow. Okay.
Cool.
Nice.
That's something that, again, I haven't tested personally,
Me
but
neither.
I would never tell somebody they're wrong on something that I don't know about. So it's fascinating. It might be something to look into.
I
know
don't know
that.
anything about it either. I'm just testing it too.
Oh, that's
So
cool. And
Awesome,
that's
dude.
part of testing and getting a sample size. I know channels were kind of like that with me. It's like, yeah, I guess this is what I'm supposed to do. And then you get those few times where the market just bounces right off your channel for so long that it's like, this is what was supposed to happen. Like, this is why I'm doing this. I get it.
Yep.
And I think 30-second range was kind of similar where it's like, you hear about it and that can't be right. You mean you just draw a box where 30 seconds of time passed and it's respected just because it's there, and then you test it a few times and eventually it's, well, I kind of like this. So
So right on. Let's go to our daily.
perfect.
Here we are, back up in the channel.
Agreed. So we've crawled back up into the channel, but a common tendency would be to see us pull back and use that channel as support. Even again today, wouldn't be unlikely. So it doesn't scream that it has to go up from here, but we're definitely hitting heavy support levels from the past. I talked about that this morning, and I will again, about how yesterday respected this level we've been talking about so well. I actually had a good day yesterday as far as trading, but I don't mean to say actually, but using this level was really cool yesterday in trading with how the day played out, and we'll talk about that in a minute. But again, drawing bodies to wicks as a support level, you can see if we scrunch it even more, we're back as far as we've been for a long time. So
Yeah, and I would encourage folks to have their daily up right now, and take a a screenshot if you want. If it's going too fast for you, take a screenshot of that level and how Travis has drawn those bodies to wicks to bodies, and how it's become such a strong level. We drew that level back in March, so we can see how it's reacting to it now and how it's respecting it now. It's pretty neat how it does that.
it's awesome. That's
Yeah.
another one of those things that if somebody was like, hey, if you draw this now, you'll see it in 3 months, I'd probably laugh in their face, because I used to not think that anything would even carry through opening bell. I would have things drawn at 7 a.m. and I'd delete them after OB, like, well, they're done now.
Yeah.
And now I'm less likely to delete really key levels. More or less, I like to look at a level till it's not respected anymore. If I see that the market's just all over and it doesn't look like it cares, that's when I might delete a level. But for as long as the market just to the tick runs away from levels perfectly, I'm not going to delete them.
Now let's talk a little bit too about the price, and if the price were to go up, what could be a likely level that the price could go to. The top of your channel for sure.
That's my first target, 4206.
And why don't we just, for easy purposes, for numbers wise, we could even just say 4,200.
Sure.
I think that, 6 more points above that. But we do love round numbers, and typically you might see a little bit of resistance there at 4,200.
Very
so
likely.
we can maybe say, so maybe we could say 4,200. So if you have a target and so you're in a bigger trade, let's say the price drops a little bit and now you've got 40 points to 4,200, maybe 4,200 or a little bit before that might be your target to get out. After 4,200, well, we've got some red candle to capture, right? So I would say then we could be looking at 4,250, which would be the bottom of your next level and the top of your channel as well, somewhere right around there. So that would be the top of that red candle. There's really nothing to hold it. If it does want to make a big move up today at some point, I would say that would be my target for after it gets by 4,200. I would say we got another 40 or another 50 points to run.
I agree. So let's look at specifically kind of what we're talking about. I'm going to zoom way in on these two levels real quick just to say if the 5-minute does this. So what we're saying is today we have an initial range between the top of this level down to about the white box. And I'll see what does the 5-minute show me until we break one of those two levels. If, however, instead of hitting resistance, we end up punching through the top of that box, then what I'd like to see is a retrace to that level and then push up. But again, as you keep going, you get towards the channel and the next level around 4240. So there's a
we might expect some resistance there.
Yep. So 4200 and then 4240 are kind of the two levels right now to see if I was scaling out, if I wanted to trade, that'd be where I'd look for targets on the extension side. Again, thinking that I like to scale out and use the risk management to take profits when I can. I wouldn't, like if I had 3 contracts, I almost never will have a 20-point gain with all 3 contracts off of a 3-point stop. It just seems like by the time I'm 10 or 15 points positive, I should be taking a good portion of that trade out. Absolutely.
Yeah. Manage your risk. Take some risk off the table there. Go ahead and take some profits there. Now, what if the price were to go down? what kind of levels would be looking at? Because we don't know for a fact the price is going to go up. This chart looks to me like it wants to go up, but if I was to say, well, what if the price goes down? What kind of levels would we look to if the price were to go down, like a target on the bottom side?
The first one is the top of the box that yesterday was respected hugely at 42.44, 40, 41.44, pardon me, 41.45,
so about
if you will.
30 points below us.
Yes.
Okay.
And that level comes from the double tap that we had in late March. So the two levels that I'm looking at on the bottom side are a combination of late February and early March, both drawn bodies to wicks. And each one of these will be a target on the bottom side. Both sides of the little box will be respected. I say little box, but really, how wide is that? 45 down to 30. So it's over 10 points wide, 15 points or so. But all three of those become targets on the downside.
If you wanted to throw another number in there, that would just make a lot of sense. I've got a level at 4,000 too. So,
okay.
Yeah, 4,000, 4,100, and then 4,150, I would say are the biggest targets that we have. Of course, 4,000 is quite a ways away, but if we do see a big move down, there's not a lot to hold it. All the way down to 4,000 to, let's say, 40.20. So that area too. So I have a couple different targets if the price does decide to crash down below us that I could run to. But again, that 4,100, I would say, yeah, would be a great spot too if it does decide to drop here. But again, we're trying not to have a bias, right? We're trying not to have a bias of, I believe the price is going to go up today. Well, that's great. You can believe that all you want. We're trying not to have that thought process. We're trying to have the thought process of reacting when the price does do something. We have a plan to trade it.
Right. More or less being able to look ahead of time and say, I have an advantage in the market if this happens. I like the idea that, I think a few traders have said it recently, but thinking before you take the trade rather than during. You should already have made your decision of when you're going to get in and what has to happen for you to take that trade before that trade's in front of you, or else that's when you kind of get nervous. You get in early, you put an extra contract or two when you might shouldn't because you didn't plan your risk or whatever it might be. But a lot of times, at least for me, making that decision ahead of time is crucial.
Yeah, and people may think, wow, Rob, 100-point drop, 150-point drop in a day, or vice versa, in a gain in a day. That's not really all that out of the ordinary in this day and age. We see 100-point gains fairly regularly now. Most of these candles on your chart,
yeah, all these are over 100.
Yeah. So that's not out of the ordinary to where, back when we were trading in 15, 16, 17, 18, 100-point days were, wow, holy mackerel. But now when we have an ATR of 10 to 15, I mean, that's 10 to 12 candlesticks, moving in one direction. So that's not out of the question to see that big of a move in a day. Cool. Let's go to our 4-hour or 240-minute chart here.
Clean up a couple levels. You'll see the same center white line there is our level that was the daily, and then the big blue one is the big daily level. So same levels, same colors going across. You can see how bodies to wicks a lot of times are respected. But our goal is to learn, how can I trust these and use them in my trading? I mean, it's easy to kind of point back and say, look how obvious this market was yesterday. And I mean, it almost bothers me sometimes. There's always that guy who says, well, if you had gotten in short up here and you had just taken it too, and they picked the very bottom quarter point, you could have made this on that move. And it's like, okay, like, thank you. But realistically, what am I really trading? So our goal is not just to look back at the market, but to say, with a plan, could I have traded it? And how can I use that into the future? Yeah. And you can see how the channel was used. The channel was respected on the bottom side yesterday. That was actually really cool. That's what I want to talk about in a minute. We'll go back to it. But been going down overall, but now we've crashed through all the lower levels of support and we're trying to climb back up. Is it a retracement or is it a actual turnaround at the bottom? I don't think we have quite enough price action for me to be sure yet.
Yeah, we're kind of right in the middle, aren't we?
Mm-hmm.
So, yep. So are you saying it could go up or it could go down?
Yes,
it
but
could.
I'd rather speak about why we have an advantage.
I've heard that said before.
Yeah, we've heard that said before, haven't we, Randy? Yeah, you bet. So again, now we're starting to develop our chop zone a little bit here. We can kind of see how the price over the last 4 hours really is kind of going sideways. Over the last 4, 8, it's not really making super higher highs or lower lows. We don't see that big move up or down right now. So that we're just, the last 1, 2, 3, 4, 5 candles, 4 candles are pretty much sideways. So we're looking for it to take a direction here after opening bell. And that's what we're going to kind of wait for. Any other comments from anybody? So what I was talking about here is these, spread it out a little bit. These candles right here. We're not seeing it really go up or down, just kind of sideways. Green, red, green, red, green, red, green, red. So not a lot going on yet. As we get down in time frames, we'll start to see a little bit more movement. But this 4-hour chart really kind of shows that we're just kind of going sideways right now, hanging around that 41, 77 mark where we're at right now. So it won't look like that necessarily on a 5-minute chart. It won't look like it's going sideways like it is now because that range is a little bigger.
Right. Keep in mind we're on a 240, so those candles that look smaller
are actually
10, 15 points even. So let's go 1-hour chart. 1-hour chart, I'll move us up just a little bit. I am going to extend, see how we bounce right off my last key level up there, so I'm going to move that forward. It's on all my charts, so the easiest way, end time, and just choose a later date. So 1 hour shows a very similar look. One thing that stands out to me is, again, how we've hit these support levels on the bottom. Now, it's not a perfect picture, but we hit support, and then we went lower, and then we hit support again to run back out of that. That is a very bullish pattern from a longer term chart. Can somebody tell me what that is?
Head and shoulders.
I'm going to say yes. It's an inverse head and shoulders. It's upside down. So yes, head and shoulders being on the top side. I can't tell you you're wrong. It is a head and shoulders on the bottom side. The idea is that you test the shoulder, then the head, then the other shoulder. We can go through really quick. Why is that a reversal pattern? What does it mean? I can do that in 2 minutes. So the idea is that you have a neckline, and from that neckline being established, why is this considered a reversal pattern? Again, thinking that the regular head and shoulders happens on the top, tells you the market might push down, and the inverse head and shoulders happens often on the bottom of the market, telling you the market might want to push up. And the reason you might believe that, or why it shows that, so from the neckline, you test first the shoulder that comes back to the key level. And you see that the first time you pushed out was roughly, we'll use a blue thing to say, that's about how far we pushed off that level. And then the second time you come back to the same level, you pushed even further off that level, showing strength from your neckline before the market pulls back again. And then the third time you push off your key level is when you get a weaker one. So it's more similar to the first than the second. So more or less you see that the first time you pushed off a key level. The second time you showed more strength, more sellers, we really want to push down. And then the third time we couldn't go as far, actually showing weakness from that level compared to last time. Now the pattern is not complete until we break back through that neckline. And if you break through the neckline back to the upside, is when the idea is that resistance has been relieved. The pattern gave up because whatever shorts were there the second time gave up the third time, showed weakness. And if you notice what happens in this pattern, oftentimes you have a low and a higher low, and then a high and a higher high. So you've already started a lightning bolt trend out of an area to break through that neckline. So a lot of times the head and shoulders, again, is showing you a reversal on the bottom of the market if it's an inverse head and shoulders, or same thing on the top side. I'll go really quick and explain the same thing on the top side. You had your neckline in the middle, right? So you pushed up once, made it pretty far, couldn't make it any further. The second time you pushed up, made it even further, showing more support, strong level. The third time, from the same neckline, you show weakness. Could be a little higher or lower than the first one, but it doesn't go above the center. And then again, when you break back through that neckline is the inclination that the market wants to run down. One thing to add, if I'm going to trade a head and shoulders, I don't like to just jump on that pattern. I drew the neckline. You'll see kind of what it was testing. What I like to see is us down, exactly, Rob, come back, retest that level, and then push down. So my picture perfect trade in this area, if I were to take it, would be this one. After you've already got a lightning bolt from the bottom of the level back to show you the turnaround, see how it went down, up, down, back. So perfect little pattern if I'm going to trade it.
That retest,
your head and shoulders.
Yep, that retest for me has become key, whether it's head and shoulders, reverse head and shoulders, or it's it's retesting a key level, including our 30-second opening range. When we go through the opening range and it comes back and retests it and then bounces off it, that's become one of my favorite setups, that retest of a key level.
Agreed.
Excellent.
So I guess we can keep rolling through. So 1 hour, 15 minute. Any other questions on the 1 hour before we keep going? All right, we're going. 15-minute chart, very similar to the 5. We'll show a couple key areas from yesterday, and the closer we get, the more you realize how much yesterday respected this level from the daily that was written about in the blog, but was really, really cool to see. So 15 is a little sideways right now. Tough to define exactly where we're going. One thing, you might use these highs over here to set a initial target from OB, seeing as how
maybe spread your chart out just a little bit.
Yeah, sure.
You're on a 20-point scale. Let's get it to where we can. There we go. Now we're starting to find out what our chop zone is. Really, I really want to see us break 4190 for a long, unless I decide to say, hey, I want to get in long down here. But after opening bell, we know how that can go either way. My chop zone on the bottom is probably going to be here. So if I'm between this area, I'm not really sure what the trend is doing because we have come down. We haven't really made a lower low yet, but if we get below this area, then I could really look to retest that area and go short. Same thing here. If I'm not already in a trade going long, I'll probably want to wait till it gets above 4190, comes back, retest that level, and then go ahead and go long. This is our chop zone right now. I would say between 90 and 70. It's a 20-point chop zone. But when we see the candles get bigger, that 20 points can get eaten up pretty quick. So that's not really that big of a chop zone.
I agree. We are seeing a turnaround around the 89 on the 15. That shows a little bit of a bullish look to it, but
it does.
Let's jump to the 5. Any other thoughts? Again, you might use that level of resistance up top. Like if I were to draw that, I might use a box, might also use a line. Either one could work, but if you use a box, use a rectangle, and I'd use something like that to just mark.
Yeah, you can see exactly. You can see where one of the reasons why I drew the chop zone where I did is because of that right there. If we can get above that, that's been showing some resistance back, at 12, 1400. If we can get above that, push above that. So we have 1, 2, 3 areas with multiple areas of resistance. So it's showing a lot of resistance there. So if we can get through that, that's where we might have our run up. If we can. On the bottom side, we could be chopping though, even down to here. We could. I mean, this could be a chop area too, based on what we saw over here yesterday.
There's other traders that I know that see both of those, as real key areas.
Yep, very key areas. So, but for the shortest term, I would say this is my chop zone for the shortest term. If I can get below that, now I can trade back down to 4150. I got about a 20-point run to trade down to 4150 from 70. If it does go short. So again, we're not trying to predict where we think the price is going to go. All we're trying to do is have a plan for if the price does break certain levels. Now we've got a plan. So, okay, we have a level to trade to. So we like to use the term trade level to level. And I think that's helped a lot of traders here in terms of having targets on the upside or downside and not just sitting there fixated on a 5-minute chart and looking at 4 points every time they take a trade, but say, hey, look, we have 20 points above us. Maybe this might be a spot where I might be able to get a little more than 4 points out of it. Anything else? Anybody else?
5 minute. I do like that though. A lot of times what that turns into for me, let's say I have a 4-3 and I have maybe 3 contracts, 3 or 4, whatever. We'll use 3 in this case. Well, a lot of times I'll keep 2 contracts on the 4 and then put 1 as a runner, maybe up towards 10 or somewhere up that I'm trying to extend the trade. So in that way, I've heavily scaled out 2/3 of my trade right there at 4 points and I'm automatically profitable. But if it does continue, then I'll be able to take extra profit. And those are not every time. That is if the situation calls for it. If larger charts tell me that it's not only going to go 4, but it's going to go 54 points, maybe I'll try and get 10 or 15 or something like that. Like Rob's saying, 100-point moves lately are not out of the ordinary, as big as that sounds.
So maybe now, so we can kind of set up for our opening bell trade. If you could get your, there you go. Yeah, widen your chart, maybe get it down to a 2-point scale, so we can kind of look and see where we would like our stop. So an ideal stop for me, if I'm going to go long, so we're going to look at entry points to go long and to go short. So if I'm going to build my trade around my stop.
Did we lose you, Rob?
Battery on your mic die?
I was wondering if that was me or him.
The suspense is too real. He's just got everybody hanging on the edge of their seat. What happens if we build our trade around our stop, Rob?
What's the number, Rob? What's the number?
You may have lost power. Or something.
Yeah, I think we lost him for a minute there, which.
Yeah. So anyway, you build your trade around your stop, and you know the rest
He's
of
going
it.
to do a 5-point stop. He's got to be at 80.
Where you know where you have to be in, somewhere between where you want your stop to be and where the range of your stop is. So a 5-point stop, you want to be somewhere inside of that 5 points when you enter the trade so that you clear it.
Okay, I'm back. Sorry about that.
I like that. You're exactly right. So they were saying if you had a 5-point stop, build it from 75,
Perfect.
and it'd be around 80 that you could potentially get in, which is around where we're at right here. So your first target for an entry would be around 80. If you're going long, you have to get better than that. Doesn't mean, okay, I have to get in right here. If you decide I'm not getting this trade unless I'm in off the 200, that'd be a good decision.
That's fine too. You bet.
I like it. So
yeah, and if you wanted to do that, you could even use a smaller stop. Now we are dealing with opening bell and emotion, so I would always, lean towards using a little bigger stop at opening bell because of the emotion that comes in. Now, what if we're going to go short? What if we decide, well, we're below the EMAs except the 200. The price has been moving down since 740, 735. Where would I have my stop if I'm going to go short? Where would I like my stop if I'm going to go short? So let's build our trade around our stop so we can find our entry.
We have a minute and a half, but where are you looking for a trade? Above the very top at 41? The best short's going to be above the very top of the move.
Correct. That's the best one.
The first thing to clear would be your 2189 to me because of how heavily those are respected at times. Go ahead.
So what we can do is start and give here's our premium, right? Here's our first one. There's our second one. And then we might look at what's a 50% retracement. So maybe I need to get above that now for my stop to go short. There's a wick back here that we could possibly get above. So let's just use this double bar here and come down 1, 2, 3, 4, 5.
1 minute left. Looks like we might
have a good position here to go long.
Yeah.
Yeah. I'm probably going to go long. Yeah. It's kind of scary, but going short right now, we're at the very bottom of the mark and our stop's going pretty bad no matter what we do going short here. So I think I'm going to go short. And I'll just use my standard 6.5 2-contract trade. And I'm going to look to get in at 78. Seems pretty good. We got 30 seconds left. Yeah, I might be able to get better than 78. Heck.
I need to remake this trade for a bigger market. I like where we're at. I'm actually going to enter 15 seconds early because of where we're at on the market.
I'm in at 78.
So we're right off the 200. I'm in at 78 too. So
right on.
There we are. I have a 4-point stop, so mine will be at 74. And if it hits, it hits.
There goes Fluffy. Jeff will be back, I think, next week. So
awesome. Look forward to having him back.
Yep. Keep Jeff in your prayers. Tomorrow, the 5th, is a real tough day for him for certain reasons, his son and stuff. So just keep Jeff Brown in your prayers tomorrow.
We'll do for sure.
Yep. So I've got a 5-point stop. So I'm at 73, and it may not matter here.
It's a real small opening range this morning.
Yeah, why don't you? What's the opening range, Randy? And I just got stopped too, so that's.
It's 74.25 to 77.75.
So 74.25 to 77. I'm sorry.
75.
75. Okay. So we'll get that in chat here in a minute, folks. I need to get it on my charts. I need to look for a spot to retest here and go short. So 77, 75.
Now, did you take that out the bottom already, Randy, or are you waiting to get in now?
Yeah, I've already taken it. It's chopped me twice, and now it looks like it's going to run when I didn't get right back in. But who knows?
Yeah, I think we have a good shot
off.
of this coming back up, Randy, and retesting. This is probably one of my favorite trades, to where it comes back up and retests and then goes down. So I'm going to use a 2-point stop, and I am going to try and get in at 4174.25. Yesterday was Chop City. I mean, Chop City, folks. It was just back and forth.
Yeah.
Yep. So I'm in, and it's a 4-contract trade with my first target at 4, my second at 8, my third at 12, and my last one at 16 points. So I'm also placing an order at the top at 77.75 going long. So if the price does decide to run back through the opening range on the top side, I want to be in it. I only have a 2-point stop, so it'll knock me out if it comes back through, and then it'll hopefully run through, and I'll get in the same type of trade going long. So I actually have an order to go long as well that's above my current stop. So what we're doing now is just waiting for the market to tell us what direction it wants to trade. Right now, our bias is short. It has to be, but we want to really let the market tell us what to do. You know, we're still in the first 5 minutes of, opening bell. So
I'm with y'all short out the bottom. My first fill will be at 4. I have a 3-point stop though. And if it goes out the top, I have not yet made a track record on jumping in as it breaks through, and that's something that actually over the last couple of weeks I've thought about doing. I still like the retest, like you're saying, Rob. Same way we went under this and came back to pick us up. I like if we're above that level and then we come back to pick me up. I'm a little more weary in the chop zone. There we go. So,
pay line.
Yep. Just got our first contract, 4 points.
Yeah, I got 2 chopped up, and my charts are slow, and I couldn't get back in, or I would have been in it.
So I hit my first pay line as well, and I can reset those if I want to.
Now let's talk a little bit about a big announcement today. Not at FNL, folks. It's not, we are going to a summer schedule though on May 15th, where we'll be meeting online in the evenings on Tuesdays and Wednesdays for a couple hours from 7 to 9 p.m. So we're going to funnel everybody in there and come on in. I know we had a great time. Malcolm was in last night. Boy, Malcolm, that was a great time. Appreciate you coming in, helping people out. Malcolm is one of our technology wizards. And we really appreciate you, Malcolm. So thanks for coming in last night. But later on today, we are having an FOMC meeting announcement, as well as a press conference. And apparently they're going to raise the interest rates, which we all know it's going to happen. It's 0.5%, so 50 BPS. So, is what it is. Just be careful during that time frame. Could see some volatility. So I would recommend not being in a trade when that comes. If you're in a trade and you're up, might be a good idea to go ahead and flatten out of that and just say, yes, I'm up. If you're down in the trade and you are willing to, you've assumed that risk when you got in the trade, go ahead and stay in it and see if it goes in your direction. So that's kind of up to you what you want to do. But I would say if you're in a trade and you're up before that FOMC announcement, go ahead and take your profit.
Oh, I like that. Thank you, Rob.
So there it is on Travis's screen. You can see down there at
well, we actually can't see because I don't have it.
No, you got to scroll. Yeah, you got to scroll down a little bit.
There's a lot of stuff going on today.
Yeah, there's a lot of stuff going on today.
So we had an employment report this morning at 8:15, which was actually not very good. I haven't seen the trade in goods and services yet. It wasn't loaded when I looked earlier when it came out. And then we have petroleum at 10:30, the FOMC announcement at 2, the Fed chair press conference at 2:30.
So be aware, folks. Please be aware.
A lot of things that people are watching. I mean, petroleum status right now is similar in my mind to jobless claims 6 months ago, where everybody wants to know what's going on with that petroleum right now. So
oil, yep.
It doesn't scream, hey, I need to jump into a trade here. If anything, it says that a lot of goobers are going to show up to the market assuming it's going to go one way or the other, and I might not want to get caught up in that. So just a thought there. That's around 10:30 today. We just came back and missed me scaling in by about a half point, which is what it is, but could have been nice. We'll see if it keeps coming back. I will not chase it to scale back in. It will either come back and pick up more orders, or it will run off without me and fill a trade.
Yeah, I'm not going to scale in on this one. In my opinion, we've seen too many wild swings through the opening range, so I don't want to necessarily add on risk in this type of trade yet. But either way, I mean, it's a great strategy though. Boy, you can really get some nice profits doing that, can't you?
Yes, sir.
Yes,
and it works out from a key level. It works pretty well.
Yep. Yeah, it does. It works out really well at key levels as well.
So it got me in just barely. We'll see if it wants to push down again. I will take another fill at 4. So we're just floating 2 contracts here in a 4.4 contract trade, meaning I have 4 contracts. If I scrunch my charts a whole lot, you'll even see my runner way down at the bottom down there, kind of out of the way. But what we're playing with is a P4 S3, or a 4-point gain and a 3-point stop from the OB level. So I'll either take 4 or stop back out on the backside.
Does anybody have questions?
And there it is. So the 4 filled again.
Nice.
And just full transparency, everything you've seen me do, I've kind of done very similarly on the other chart. So now we filled the 4-3 again. If it keeps running, we'll be able to take 1 at 10. The other one, I almost assume my stop will get me out. If this market does the unusual thing of just running straight down forever, I might be able to capture that, but I fully anticipate that my stop for that last runner will get me out, be it at hopefully more than 4 points. As long as I get more than 4 points, I've done my job in that trade. So I'm not going to scale back in again. We've taken 2 sets of profits from that key level, and now we'll either let it go or come back and stop us out. If it stops us out, I'll be positive on the trade. If it keeps going, I'll be even more positive on the trade.
Yep.
Like Rob was saying, if you trust a key level at times, and the support resistance levels are usually the ones I'll do it from, but scale out and then get back in, and I do strongly recommend build a track record on it. But you can get a few fills in a row at times.
Practice. Yeah, you got to practice it a lot, so you know when to do it and when not to do it.
Mm-hmm.
Like Alan Iverson says, practice. Ain't nobody talking about no practice. Right? I throw out my Alan Iverson from time to time. I mean, basketball fans know what I'm talking about.
I remember that. They blew that up so
conference.
much. This ain't a game. It's
This ain't a game. What are we talking about here? We talking about practice. But in trading, in sports, you know, practice is we all know that it's vital. So
that's when you go back to people like Michael Jordan, for example, who always practiced as hard as they played. So when they were on the court, they'd just say, yeah, that's what I usually do. And everybody around him would tell you the same thing. Like, he's always just, I actually watched a documentary on him recently where they were talking about how he had to win at everything, whether it was throwing paper. Yeah. Like,
I saw that documentary. Yeah. Where he was just at the ping pong. He was just, oh man, he was fired up.
Like, he always had to win everything, no matter what it was. That was really fascinating to me. So,
you know, it reminded me of Ladine when she was playing ping pong. Boy, you should have seen how fired up she was.
I would like to play ping pong.
Oh my God,
that'd be fun.
It was fun. It was fun. Ladine on the golf course. Ladine on the pickleball court. Ladine on the, it's pretty funny. So if you folks don't know, well, everybody here knows Ladine, of course, but she comes in at night and she trades overnight, and it's a lot of fun. She's a lot of fun. So she's got that competitive spirit too. All right, here we go. Let's run down now.
This picked up 3 sets of traders without going back through. So it did. If I had scaled back in, it would have come back and gotten me again and then pushed down. I didn't do it this time, but I watched it happen. It's like, oh, maybe I should have. Just trade it till it breaks. A lot of times that's what I'll do later in the afternoon, is trade it till I stop out. So whether that's 1 fill and then a stop out, or 1, 2, 3, 4 fills and then a stop, whatever it might be, but basically just trade it till it doesn't work. And there we are. Yep. Back through the other side.
Yep. No, we haven't made a lower low. We have a retracement, and it's very early in the candle though. So could get a diamond here if it does turn around, but it doesn't look like it wants to yet. Boy, it came within a quarter point and stopped me out.
Same. About point away.
Yeah, I'm at 76.25. So I got a 2-point stop. And the reason why I use a 2-point stop, and there are times I'll even use a 1-point stop, is because I want to take multiple cracks at it. So the shorter my stop is, the more times I can take a crack at it. Because remember, if this type of trade, it's all about momentum and getting momentum and getting in that trade that takes off and just keeps going. So sometimes you have to take a couple cracks at it. So I want to try and limit my risk as much as I can. So there's a balance between having your stop close and having it big enough to keep it away. And that's something that we're working on to decide, what would be a good stop. And there are certain times that certain stops are better. And really, you can only, I wish there was a formula that we could give people, but as of right now, it's like, you just got to do it and decide what is the stop going to be that's best for this situation. And from what I found, this opening range trade, I would say a 1 or a 2-point stop is probably the way to go, because when you start to get chopped up, you either have to know that, okay, I'm getting chopped up, it's going back and forth through the opening range, time to stop. And if you have a 4-point stop, a 5-point stop, you're only going to be able to do it once or twice before you just get absolutely annihilated. So we do have a blog. We'll have a blog coming out probably in the next couple of weeks on this 30-second opening range. Randy was so nice to put something together for us, so he and I are working on that together. But I do want to alert people to the blog on the website that's on there now that Travis did. So it's a fabulous blog that he did, and he and I worked on it together. And it's really about transferring levels from your bigger charts to your 5-minute execution chart, and how to take those trades and find those trades using those levels. So it's a 2-parter. So take your time with it. It's not a fast read by any means, but it's very detailed. So we just hit our stop. So we got out of that trade, and that ended up being a -2 trade for me, because we never did find the momentum. So we did make 4 on it, but then we lost 6 at 3 contracts, 2 points. So that's a -6. So -6 plus 4 would be -2 for mine. Because Travis did the retest, he was able to get a couple of additional trades in there at 4 points. So great job, Travis.
I lost 2 on one and 3 on the other. So I went 1 contract down 5, plus 16 minus 5 makes me plus 11 overall over
Nice.
that.
Good job.
So again, just taking advantage of a short area till it stops working. In this case, we stopped out. So now I'd wait. I mean, to me, I'm waiting on a turnaround in the short direction. It'd be nice to see. I don't know when it's going to happen. The aggressive trader might want to get in off of, I mean, it's tough to say where, somewhere the EMAs or the bottom of the 30-second range, but that's a wide range to me. So the safer trade, the more conservative trade, the one we try and help people with, is let it turn around.
Yep.
And then clear that with my stop and say, if that's where it turns around, then let it keep going after that.
Yeah, show a double bar here, show a diamond. We've got a couple of EMAs. We've got a 30-second opening range. We also have the reopen, or the close from yesterday is right there as well. The close from yesterday is at 4174.75. So just a little bit above the bottom of the opening range. There we go. So now I'm in going long at the top. So we'll see what happens here, right?
I like it.
Yeah, well, we'll see. This may not work out so well. This is kind of a choppy area, so we're gonna give it one shot here. And yesterday was we were able to get almost back to even yesterday after getting really chopped up in the morning. So that one didn't work out. That stopped us out. So we'll just keep giving it a shot here. We are trying to grab momentum out the top side. Now, the other thing we will do is look for, on another account, we will look for a turnaround and a possible spot to go short.
Yeah, see, this area is scary to me because the 30-second range screams up, the EMAs scream down.
I
Like the
agree.
EMAs scream it's a perfect place for a turnaround to go short. The 30-second range screams, hey, everybody's about to stack in and try and shove it through the top of this area.
Yeah,
So
it's
if you
it's a
wanted to be patient, I'd tell you that's the right decision too.
I agree 100%. I would say be patient here. Look for a turnaround at a key level, confirmation of a turnaround at a key level, and then go ahead and take a trade going short
Right.
because
If
we
we're in a
haven't
short
made a lower low.
Yeah, exactly. If we're in a short trend, it's a great place to see the turnaround, but it hasn't turned yet. We see 3 big greens in a row, so nothing tells us that there's not going to be another big green right here. So
Correct.
until we see that red confirmation of a turnaround, meaning maybe we get something like this where we actually see the market show a red candle, or maybe you're using blue as down, whichever, but you see that actual turnaround is self-explanatory. If you think about what the market does during those candles, was going up and then is pointed down. So if we can get that close again as a red candle, that's the sign to say, hey, maybe it is turning here. Let's see if we can clear our stop. Until then, we've got 3 greens in a row. Maybe.
All right. So anybody have questions? And we are too. We're chopping in an opening range and a couple opening range overnight ranges. So let me see here where they're at. Yeah, we've got a couple opening ranges here. So here we could have a confirmation of a turnaround here. So
Do you get in out the bottom if it comes out the bottom?
Yeah, normally I would, but we can't really find a direction. So this is kind of a chop area. So I'm trying to avoid yesterday's. So no, I did not yet. We're chopping through it. So what I'd like it to do is come back out the top. Either if I'm on the top, come back up the top, turn around and retest the top, or same thing on the bottom. And we just haven't do that. We're chopping right in the middle of it now. So staying out.
I like it.
Staying out. Yep. The market, my bias now is short, but again, we really haven't got a really strong direction in terms of a turnaround to get in a trade going short. So it's kind of a wait and see still.
Yeah, I want to see it cross the 20. It tapped the 20. If it gets above the 20, then I like long because it's the swing between the Bollingers.
Mm-hmm. Yep. I see that.
This is when I would start thinking about my OB now that it's broken out the top, wants to show that it wants to stay up there. And now it's like, we'll see if we can get back in.
So this is what I mean when it goes out the top and then comes back and retests.
Mm-hmm.
Now, hopefully this doesn't just drop like a rock and go back through again, right?
Wouldn't
shock me if it did. Yeah,
because it's the perfect place to go short. We just talked about that. As far as the 89, the 21 being here, I mean, definitely a tight area where the direction we choose might be pretty explosive. And I don't know what way that's going to be. But just based on how many people would want it to go both ways here, really just... Oh, come on. Just kiss my entry. There it is. So I'm in long now, off the top of the OB range.
Mm-hmm. Me too. Me too.
And I want to shorten this. This is the trade I had before. I only want to risk like 2 or 3.
Now this puppy may run away from us too in terms of the turnaround. So this is a pretty good spot to go short. We have a turnaround here. We have a double bar and a diamond forming. So can we clear a stop? So, if we had our stop at 81, 1, 2, 3, a 5-point stop would put us around 76, getting in short. But again, we still have a lot of time left on the clock. So on a 5-minute chart, 3 minutes left. This could easily come right back up and just keep going. So hardest part about trading, waiting. So the price really hasn't said it wants to go in either direction yet, has it?
And
Yeah,
it's real
it's hanging-
similar to yesterday.
It's hanging out in that 30-second zone.
Yeah, which is a red flag that the price hasn't picked a direction yet. It tells you that, hey, look, it hasn't picked up momentum, hasn't picked a direction it wants to go yet. We have made a lower low, so the bias has got to be short. But again, seeing another lower low here would probably be a nice confirmation that we're in a downtrend. Anybody else see anything that stands out to them on any other chart or price action that would warrant, I mean, this is a trade that meets the rules. So
That's what I'm looking at.
yeah, I mean, a stop of it at around 82.
That's
So
exactly where I was headed.
4 or 5. So 5-point stop will put us at 77. 4-point stop at 78. Now we're at the bottom half of the 5-minute timer. So I like to wait to at least 2:30, and then I really get serious around 1:30, and then obviously the last 30 seconds. My only concern here is that this price may just want to take off long. I want to wait. I think I'm going to wait on this candle to get in, but not a bad spot at all to get in.
I got hit, and we're running.
There you go, dude. Nice
I'm
job.
gonna take my first one. We got our first fill at 4.5. So
there you go.
I've had an awesome opening bell today.
Yeah.
There's another one. I want this target a little above that bottom.
Yeah, I wouldn't try to make a lower low here.
No. And then the runner he's in outer space down there. I don't even know where.
Yeah, right.
just out of the way. So there we hit our 10, 9, 8, whatever it is. I'm just going to take it. Risk management says we're still good there. So 0.5 point off. It's kissing against it at a place where there's heavy support. Don't love the move. So I'm just going to take my profit right where it's at. If it was less than my stop, I wouldn't do that. But in this case, being at 7 or 8 points positive, risking 4, that fits my rules to say I'll take it where it sits. So even though I changed the plan slightly, I saw it bounce off 3, 4, 5 times right in front of my fill. It's like I'm not giving that back because we're a 0.5 point, a point away from it. So at that point, I'm going to take it.
Nice job.
I'd already decided we didn't want to make the low for that reason. So now we're in one contract. If it goes forever, we'll take forever. If it comes back, we'll stop out. Well, we'll leave it -1. I don't need to give back a 4-point stop. So if it comes back to my entry, we'll be out of the trade. If it doesn't come back to my entry, then we'll see how far it goes.
And again, good position. Saw the turnaround. I didn't get in the trade because I was waiting a little bit longer, and I waited a little too long, and it just took off. So, good job, Travis.
Oh, thank you. The temptation is to scale back in at OB right here off the bottom. Yeah. And still be ahead of your entry. I think I'm actually going to do it today because of how down we look after that retracement. So we could reuse that same key level. Don't do that to me. knowing that we're in a lightning bolt pattern down, oftentimes it will stair step and continue down. So as long as I can keep my stop above the OB range and scale back in, then I'll scale back in ahead of my entry point. So my stop, even though I'm getting in with a 3 or 4 point stop, my stop really is close to 0 because it's really going to be right around my entry point. So I'm scaling back in a way that I'm not going to lose more money. I'm just willing to give up what I'm ahead on this one contract to be back into this potential move, if that makes sense.
Yep. Makes sense to me. Does that make sense to everybody else? That this last contract, he's already
Yes, it
filled.
does.
Perfect. He's already filled on his other, how many was that? 3? You already filled on 3 contracts. So your final contract here, he's willing to risk these points to scale in. So he's already banked the other 3 contracts, those points. Now he's looking to scale in, and he's willing to risk these points on this final contract.
Right. Bottom line, if I take that scale in and it goes straight to stop out, this trade breaks even instead of losing 4 contracts, 3 contracts worth of points.
Not the whole trade, just this final.
Just this final set. Right.
Yeah.
We're definitely ahead in this trade overall.
Yeah. You've already banked those other 3 contracts. They're not at play anymore. They're done. They're in the bank. So you don't have to worry about those. So we'll see if he gets in here. And
I set the order. It came back, kissed my order.
Yeah, I saw that.
I think you heard me say, "Don't do that to me."
Yeah,
It's just like,
yeah.
if only I'd made that decision before and was in the front of the line, right?
Yep. It happens.
No complaints. It's a sample size, if you will, just making the same decisions over time. One trade should not change whether you're profitable or negative over time. So
Correct.
just repeating those emotions, knowing that, oh, in a perfect world, that order picked up and I'm already 5 to 7 points positive in it. But in this case, we kissed my order and didn't pick me up, probably picked up a few other people that were thinking the same thing. I do like to leave a scale in about a half point away from the OB range if it goes below it. Like in this case, see how I'm not right on it? I've found more comfort there when I'm not using a very short stop. Now, if you're using a 1 or 2 point stop, then you might have to use the OB range. But based on how many times I've seen it do that, then
I had a limit order to it at the opening range, and it did not get me either. So mine was a little farther away. I think mine missed it by a half point. So
still close though.
Yep. So at this point, I'll probably take it off. We have made a lower low now.
Well.
Yeah, we've made a lower low now. So I don't want to see it come back with momentum, come back the other way, grab me, and then just keep running through. So when you miss your spot for one reason or another, you almost want to just reset yourself and say, okay, what do I want to do now? Now, if it comes back up and I see some sort of turnaround up at that area, now I might look to go ahead and try it again. But once we've made a move like this down, the likelihood of it continuing down before it comes back up is, well, I guess it could happen. But so far we've seen the price get down to this level and do what? Go right back up to, that opening range area. So until it just shows it doesn't want to do that, I don't think I want to leave a limit order there when I missed it the first time.
Let's go look and see if we're crashing into anything. We're hitting that low from overnight. So bottom of the wick from overnight is kind of where we're at. You might expect if we close under this level that this move wants to continue. So does this mean I pout because I didn't pick up my other order? No, not at all. Like, this trade is still awesomely just doing what it's supposed to do. So that's one thing I know. Go ahead.
Also multiple taps near this pivot point right here.
It is. And if it breaks through, then pivot point of what was support oftentimes becomes resistance. But while we're testing it, you never really know which way it's going to break out. So come on down. I'm going to put my fill instead of down in that area. 4150 is a pretty big number. I'll leave it at 51. Just comfortable runner for the day, not testing the next key level. And one thing I wanted to talk about from yesterday, we talked about these 2 daily levels. So I'm going to go back and show the daily level before I talk about yesterday. But the daily, you can see we had these strong 2 areas of support. I said I'd talk about them later. And yesterday we actually used that as support, broke above it, used it as support to push out. So let's go look at what that looks like. And you'll see why I have my target set just above that area from a daily standpoint. So going back to the 5-minute, I'm just going to go straight back to yesterday. So I do have a trade on the screen, but we're going to move it. Move it, move it, move it. And here's yesterday. So yesterday you'll see opening bells about right here, 9:30, 10 o'clock yesterday. Everything before that was overnight. So you can see overnight we're kind of creeping up. We showed that we wanted to use that level of support before crashing into it on the way down. When we crashed into that level, we hit the bottom very perfectly and went sideways there for 6 or 7 candles, 5 or 6 candles. So a lot of time, 30 minutes plus of time, that we were sitting right on the bottom before pushing up. And as we got out of that area, you can see yesterday used very heavily as support the top of that daily range that was written about weeks ago. So if you had drawn that level on your charts from the F&O blog Rob was mentioning, and you'd have the same level, and you'd have recognized how we tested the bottom, used it as support, pushed out, and then retested on our way out a few different times that same level before pushing forward. Full transparency, I took 2 trades yesterday, so I'll just see if I can do this without. Yeah, so you'll see I'm in the same OB trade right now, but yesterday I took 2 trades and they both filled. One of them was long. We came back, retested as support, the 89 and 200. That was a 7.5 that filled, long off of the key level. The second trade yesterday, I could zoom in just a little bit to show, but second trade yesterday, about the same situation where we came, so that's number 1, was a 7.5. That one was +7. Number 2 yesterday was a P12S8 off of the same level. You'll see my entry point right there, and then 12 points up was up above. And that was the double bar. That was the cleanest situation I had to say, okay, we have a higher high, a retracement, and then a turnaround, which was a diamond as well, right at the key level. So yesterday gave 2 trades off of the same look, off of a level that was drawn weeks ago, which if you had told me that early on in trading, I'd have probably laughed you out of the room. Like, you mean you draw this how many months ago type thing? But it's really fascinating. It's not that it has to happen, but if it does. So the big thing I want to point out on this trade, let me zoom in just a little more. When I got in, I did not get in off of the red candle here. I did not get in off the red candle here or there or here. What am I trying to say? I'm trying to say that when it gets to that level, I have to wait to say, if it turns here, then I have a good trade. Rather than assuming me, Travis, can predict the market this morning, I'm going to say, if it turns, I like it. So you'll see red down, green up showed me it wanted to stay there, and then I got in the trade. And same thing the second time, red down, and then I got in on the green candle that was facing the direction I wanted to trade. So I knew what I had to clear. If you go to exactly where my stop and gain was on that trade, we can look and see that. Sorry, I know my fill's kind of messing with things right now. I'll move it just to get it out of the way. But you'll see 49.75. Let's say I got in at 50. Well, 8 points back puts my stop at 42, which is pretty clear. Maybe 1 wick back there is not there, but I cleared the key level and almost everything else. So 42 was clear enough to me. And then 12 points up, very reasonable to fill in 2 or 3 candles. Didn't have to break a high or anything. So even though a 12.8 is a very large trade, it was very reasonable that we would fill that trade within 10 or 15 minutes. And that was a trade that I took yesterday. So any questions as to why you would have that daily level on or how you might have traded? If you said this was a chop zone, we didn't have much of a trend, you're also right. I'm not saying you had to trade it, but I want to point out, if you wanted to trade this day, how might you have approached this situation? Well, your target entry was right here, based on the key level, until it told you otherwise.
So you know what's helped me, Travis, too, is taking a daily level and having it be a separate color. So I actually have a daily level color. So when as a template. So I'm going to share my chart really quick so people just can kind of see the difference between Travis and my chart, but how they are similar in terms of what the levels look like.
Are you on a daily?
Yep. Nope. I'm on a 5-minute chart. This is my execution chart. Here's that same level that Travis has. Let's put yours down just for 1 second, Travis.
Yeah, I can't see yours yet. I'll just pull mine down completely.
Yeah. So you can see here, see how this level here, that's from my daily chart. So if I click in here, I go to properties, and I go to template, I can see here when I load it, I have a daily level. So when I do this daily level, I can load it to all my charts. So when I come on here, because as you can see, I've got different levels, right? I've got opening range levels. This is a very key level. Anytime I have a level in green, that to me is a really key level that I need to keep an eye on. But now when I transfer these daily levels over, I know that they're in this lavender, with gray in it. So it separates it from everything else. I can say to myself, hey, that is from a daily level. That's my daily level on my execution charts, because I get too many levels on here. I'm like, okay, was that my reopening range? And my reopening ranges are in purple. My opening ranges are in this brown, and then my key levels are in green. So finding some sort of color coding system, go ahead and share your charts again. Finding some sort of color coding system, honestly, is a really great way, folks, to be able to identify what is a key level, what is an opening range, what is from your daily levels. That's what's working for me. You have to find what works for you, but having those, using a template seems to work pretty well.
So real quick, I agree, Rob. Everything you just said wholeheartedly. I like to remember where my levels are from. So a lot of times you will see different colors. I don't have them labeled per chart, but I know where the white one's from. I know where this blue one is. I know where the purple one is up top that's up above that. Like, I remember what they are because I choose to extend them. If you use a range like your Y range or X range, then they will last forever until you delete them. So it gets a little harder to remember which is which. Just depends on which one you use. But the point I wanted to make, I just took it was 20 points out of my runner and I closed it. And the reason being is because when I look to the left, I see how much support is over here. And I said 20 is a great number. So I closed it right there, even though my target was 7 points below that initially. And that's okay to me. Mm-hmm. A lot of times what I like to do is, you'll see I'm still in the same sim trade. So I've matched most of my trades. I actually did a little better live than I did on sim. I scaled in an extra time. It's pretty cool this morning. We had a pretty good morning. I'll go back through that later if you'd like to, but really cool morning where I did stop out a couple times, but most of them were scale outs on the way down through. So anything blue on the bottom is getting out of a trade. There was one stop out up top, and that's the only time I stopped out since opening bell. Everything else was a fill. So we filled. Scaled in.
I believe you got out, Travis. You got out at the top of yesterday's opening range.
I got out right at 78.50 where we stopped out initially, and then when I saw it turning off the 89 and blue diamond, got back in, and then it just ran away.
That was the top of yesterday's opening range.
I wish I'd have had it. I like looking at yesterday. You know as much as I do, Rob. That's what I've been looking at lately. Yesterday's OB range and yesterday's hour box, and I wasn't on yesterday at OB, so that's part of why I don't have them on my charts today. So it's really fascinating. It's another thing to say. Maybe if I'd cleared that, I would have never stopped out. But again, no complaints this morning. Awesome morning.
No, I think that's a great spot to get out, because that's a normal spot where there's going to be a bunch of buy orders sitting
there. More or less, it's likely that at this point in time we see a big wick up, and I don't want to hang on to that. Like we just talked about, if I see that it's turning, then I'll get back in and clear my stop. But as it's pushing up, we talked about that at the time, it's pushing up off the OB range, down off the EMAs. That's a really tight spot right there that explains a lot of this move. And there's a lot of people out there saying, what's going on the news? Why are we getting so much down? In reality, who cares? We turned around perfectly off the 89 EMA, have since pushed down, retested the OB range right where it was supposed to, and then stair-stepped its way down. That was a bus ride that picked up a lot of people.
Yeah.
So it is what it is. I don't mean to say who cares, but it doesn't necessarily need an outside event. That is normal price action for the market.
It is. It's normal price action. It's auction theory is all it is. It's just a big auction going on.
That's a big down move.
Yep. So, well, right on, folks. Hey, I think we're going to end the stream. Obviously, the members, we'll hang out, and we'll trade all day and do some trading tonight. But again, thanks, Travis. Great day. Great job live streaming here. And thanks, everybody, for their participation as well.
One thing I do like to do before you close is to compare, like I'll take the same trade sim and live and compare over a track record how I use my runners. Like I got out at 20 points. In this case, I'm going to squeeze my stop on my sim trade to say, did I do better or worse on that trade? And it gives me kind of a feeling over time of whether I should try and give the trade more room to breathe or squeeze it really tight. Sometimes you can't know, and there's not always a exact predictable set of factors into how tight you squeeze a runner at times. So that's something I like to work on, and I'll compare the two and say, okay, I got out of my live trade here. What can I do with my sim trade? Or I got out of my sim, whatever it might be, but compare the two. So again, fun morning though. Thanks for hanging out. Awesome OB.
Oh, tomorrow I will probably not be here. So Travis, you want to handle with Randy and Titus and anybody else that wants to get on the mic. If you want to, I can show you how to live stream if you want to do it. That'd be fine. Pretty simple stuff.
Yeah, I will. I have no
Okay.
problem helping.
Cool. Then let's plan on hooking up a little bit later today, and I'll show you how to do all that. And again, thanks.